Good day, everybody. My name is Ted Gardner. I'm one of the portfolio managers on Westwood Salient's Energy Infrastructure team. Today, I'm going to briefly review the March and year-to-date performance and then move on to more timely matters, specifically the tariffs and their potential impact on our space. So looking first at performance for both the month and year, good month, up about 1.5 to 1.8% for both the AMEI and AMNA. And then year to date, up over 6% and almost 7% for AMEI, while the AMZ was basically flat for the month. Year to date, it is outperforming, as we have seen some of those less expensive MLPs outperform. So it's up about 12.6% year to date. On the other energy indices, year to date, the XLE is doing pretty well, up almost 10%. But we have continued to see some weakness on the solar side, with that ETF down 8%, and then mixed results really for the rest of that group. From a commodity perspective, oil's down a little bit through the end of March, down about 3.3% for the year. Gas has rallied up about 11.9%, and then meanwhile, the global LNG markets have taken a bit of a hit, down between 8 and about 13% for those two markets specifically. Looking at the three buckets that we use in our space, for the month, the Canadians meaningfully outperformed, up about 5% on average, or right at 5%. That's due to really, in our view, the beginning of talks about the tariffs. So there was a bit of a flight to safety for some of those names on the Canadian side. MLPs did okay, up 1.5%. The highest performer there was Genesis, that was up 22.5%. On the heels of their guidance that they gave for this year and the sale of one of their businesses that helped with the leverage situation. And C Corps really didn't have a great month, got about 4.5% on average. That was mostly due to Solaris as well as Venture Global, which is a recent IPO that struggled out of the gate. From a year-to-date perspective, MLPs have led up about 15.5% on average. That was led by Genesis, which is up 57.6%. The Canadians were up about 6.2% on average, and the C Corps were up 2.9% on average, although that average was brought down significantly by names such as Venture Global and Solaris. So in summary, a decent month performance-wise during March and a pretty good start to the year through the first quarter. However, in April, we have seen a bit of a shift in sentiment. As you all know, on April 2nd, President Trump introduced his reciprocal tariffs, which has brought quite a bit of uncertainty into the market. And with that uncertainty has come a swift and deep correction across the equity markets. For the 3 trading days from April 3rd through April 7th, the S&P from top to bottom fell 14.7%, crude oil fell 18.4%, and then both AMNA and AMEI fell about 17.5% each. As we look at correlations, as we often see during these types of risk-off markets, correlations went above 0.9 for the midstream space versus both the broad market and the commodity. And with this move, we've seen the valuations in terms of EV to EBITDA multiples, which we often show you guys, have moved from 10.5 times down to 9.5 times. So again, quite a bit of a move for our space. So we just wanted to spend a few minutes talking through the tariffs and their potential impacts, both directly and indirectly. And first of all, we just wanted to start with the value proposition for our space. So these are fee-based, stable cash flow businesses that have minimal commodity risk. And as a result, we have high dividend payouts. And we do not see any change to that value proposition from the announcement of these tariffs. In terms of direct impacts, typically when you look at a pipeline project, your highest cost is going to be labor, as you might expect. But steel costs are going to be where you have some direct exposure for these companies. And depending on the type of pipeline, the diameter, et cetera, you're typically talking, call it 15% of a project cost on the low end and around 30% on the high end. So with those 25% tariffs, you could see as high as about a 7.5% impact if you sourced all of your steel from foreign sources, which is generally not the case. So while 7.5% isn't nothing, we also don't see it as a massive game changer for space. We've also gotten questions on how this might impact the exports for, an LNG exporter such as Cheniere. And while we don't have the specifics of every individual contract, from what we know, virtually all of those contracts are FOB, which means free on board. So whenever Cheniere delivers the volumes to their dock, it's basically off their hands and in the hands of the shipper or the end user. So there would not be tariff impact there. And it's similarly on NGL exports as well, generally have the same structure. So outside of steel, we don't really see our companies paying a lot of tariffs. The other impacts on our space are indirect. Really, we're talking about the economic impacts if we do have a recession, what might happen with energy demand, with commodity prices, and thus the volumes that would flow through the pipelines. So far, as you can imagine, in such a short period, we've had a pretty wide range of estimates from economists. We'd say on average, we've seen roughly a 1% markdown in GDP growth expectations and about a 1% increase in inflation expectations. On the extreme end of that, we've seen about a 3% markdown in GDP growth, which would put you into recessionary territory. And that same economist had a 6% expectation on CPI. So the inflationary impact, as most of you know, could prove to actually be a tailwind for our space, given the fact that you do have inflation escalators in the vast majority of contracts in the midstream space. From a recessionary perspective, we think it's important to highlight, first of all, that energy demand growth has typically declined during a recession, but not turned negative. The exception to that is some sort of crisis like we saw with COVID and like we saw with the financial crisis back in 2008. So we would, however, expect producers to start slowing down drilling here at $60 oil. And that could impact the volumes about 6 months out. Effectively, all of the U.S. oil production growth is expected to come from the Permian. So perhaps that comes in at, say, 250,000 barrels of growth this year per day, rather than the 500 plus that many analysts expected. So again, you just see a slowdown in the growth rate rather than an outright decline in volumes. Natural gas liquids, or NGLs, likewise are tied to the economy as they are used in applications such as petrochemical feedstocks, et cetera. So you would have some sensitivity to a slowdown from a consumer perspective as well with that group. In closing, there is indeed a lot of uncertainty out there in terms of how this plays out and how long it takes to play out. However, we have very high confidence in the stability of the dividends and even the growth of those dividends for the companies that we own in our portfolios. And historically, drawdowns of this severity have proven to be an opportunity, even if you don't pick the absolute bottom. Thank you for your time today. I hope it was useful. Please reach out to your Westwood representative if you have any other questions.